Hey everybody, Boris, Schlossberg, BKTraderFx. Welcome to our weekly commentary for the week of January 18th. Today I'm going to talk a little bit about the idea of risk and no risk, how it impacts currency trade market, and how it really had a big impact on our live trading this Friday. Let's start out by just taking a look at the chart of dollar yen Thursday night going into Friday morning. As you can see, dollar yen rallied pretty substantially all the way till about the London Open. And no surprise, because watch this. I'm going to pull up the chart of the equity markets that night. And as you can see, the Nikkei had a huge rally. Went about, not a huge rally, but a decent rally, about 200 points, all the way through until the Nikkei closed session, right? So here's where it gets interesting, though. Let me pull back the equity piece. And as you can see, like right around here, dollar yen begins to weaken substantially, meaning that risk aversion kicks in. Yen begins to be bought, not sold. Why? Again, taking a look at equity prices, Europe opens up, and Europe opens up weak. This was the prior day's open, and it's opening up below that prior day's open. So, how does all of this relate to our day-to-day trading? Well, the night of Friday morning, actually Friday morning AM, the key trade we're all looking at was pound dollar, because the big event risk of the night was UK retail sales. If you followed Kathy, you would have made a ton of money, because as usual she was deadly correct in her predict skills, and she said UK retail sales were likely to be weak. If you had gone short 10-15 minutes before the release, you know, your risk was basically, let's see, what was the high here? 22 points, maybe about 20-30 points, and the thing dropped like a rock for 100 points afterwards. But that's not how we trade our reactive setups. We do not try to guess the news. We try to anticipate what to do once the news hits the tape. So looking at this idea prior to the news hitting the tape, I said to everyone in the trading room, we're going to do two things depending on how the release prints. If the data is strong and we're going to need to get long pounds, we're going to sell euro pound, because at that point euro was much weaker than the yen. If, on the other hand, the data is weak, we're going to sell pound yen. And pound yen was going to be the better trade to take than going long euro pound. Let's look at exactly what happened. Why did I say we want to sell pound yen? Because at that point, remember, at around 2:30 in the morning, let me go back to dollar yen. The big story was risk aversion. The big story was the selling of equities, right? And my thought was, if that's the background, we want to be selling pound yen because that's going to help our cause. And what happened? Exactly as I had predicted. We went short right around here at around 2:10:16 after the news came out. The news, by the way, was absolutely horrid, basically signaling the fact that BOE is going to cut rates come February. We got short around 2:10:16. And within 2 minutes already made our first profit target, and within the next 10-15 minutes had made another one of our profit targets. I would have actually hung in the trade a little longer. I got out at around 209.85 because I had to go write my research. But the trade was good from the time of entry to the actual bottom for a good 55 points, all within a matter of 10 minutes, right? Let's flip this around, take a look at what was happening at the euro pound. If you had chosen euro pound at the time to basically get short pounds, go long euros, right? This was the story for you. You would have gotten long, like right around here, around 66. And for the next 10 minutes, 20 minutes, 30 minutes, 40 minutes, 50 minutes, 60 minutes, 70 minutes, 80 minutes, for the next 2 hours, you would have gotten nothing done. There was about a 5-point worth of movement. Because at that time, risk was the predominant theme, and euro pound, which is sort of more of a carry trade, viewed as a carry trade at this point, did not participate very well in that move. Now, ironically enough, by the way, let me just show you what happened to equity markets, because this was just crazy, crazy volatility. So, equity markets actually first rallied huge. You know, Europe, the rally in Europe, we had a big move in Europe, that risk assumption. Then US held that up, and then they collapsed in the US afternoon, and all the carries came back down. So if you had stayed in the long term, you had a very roller coaster ride in pound yen, right? you would have, if you had stayed in this trade, not banked your profits right over here, you actually would have had the whole trade retrace on you as carry trades came back in vogue and then collapse all the way down. This is ironic, and of course basically shows that if you had stayed in the long term, you probably would have done better with Euro Pound, at least in terms of safety. But that's not what we do when we trade reactive trades. We're not interested in what happens in 5 hours or 10 hours forward, because all of those things are completely out of our control. What is in our control is what happens in the next 10 to 20 minutes after the news release. And the next 10 to 20 minutes, the pound yen trade was the much better trade than the Euro Pound trade, even though end of the day, the Euro Pound trade was just as good. This is what makes markets fascinating and sometimes so difficult to grasp. I hope you guys had a little bit more of an insight as to exactly what went down and how we traded it. I hope you guys enjoyed it. Next week, more razor sharp calls from Kathy on future event risk, more trade ideas from us, and we hope to see you at BKTraderFx. Wishing you the best.